You log into your trading app, charts are moving, prices are ticking, and you're sitting there thinking, right, when exactly am I supposed to get in? Knowing how to trade is one thing, but first you have to figure out your style. That's why I'm going to go over the 4 types of trading strategy to help you decide which one you should be using. Hi guys, I'm Jasper, market analyst for WeTrade and founder of Trading Writers, and I'm here to help improve your trading education. Before we dive in, a quick but important disclaimer: trading carries inherent risks, including the possibility of losing your invested capital. This video is for educational purposes only and does not constitute financial advice. Always conduct your own research and consider your risk tolerance before engaging in the markets. There's no one-size-fits-all strategy. Some traders love speed, in and out like a Formula One pit stop. Others put on a few trades while working a full-time job. And then you've got the ones who'll hold a position longer than a family grudge. There are 4 main types of trading strategies I want to cover here: scalping, day trading, swing trading, and position trading. Each has its own personality, a bit like the people who use them. Scalping. If I can make the comparison between traders and runners, scalpers would be the sprinters of the bunch. Scalpers look to make loads of very quick trades, grabbing tiny little profits from the price movements, and if you're scalping, your trades are going to last from seconds to minutes. If a scalp takes an hour, you're doing something wrong. When scalping, there's no room for interest in the big picture stuff. No PE ratios, no macroeconomics, no geopolitics, just price movement. I knew a scalper who wouldn't even drink coffee because he said it made his hands shake too much when clicking the mouse. Respect, honestly. When scalping, you're looking for tiny movements, maybe a 3 to 10 pip gain. No big predictions here, just reacting to short-term price action. You'd usually do this around high volume times like the London Open or US session. Scalping works best on tight spread markets, so forex pairs like Eurodollar, gold, or indices like the DAX or US 30. On MT4, I've got spread showing here in the market watch window. Always worth keeping an eye on that. And with a strategy like this, you'll want quick execution, so using the one-click trading panel on MT4 really helps. You've got to be fast in, out, job done. Very hands-on, very focused. Here's a summary of the pros and cons of scalping. Pros: quick gains and losses, lots of trading opportunities, exposure to market risk is kept short, and cons: transaction costs rack up quickly, mentally intense, limited profit per trade, you're working volume over size. If you've got fast fingers, love charts, and don't mind sitting glued to your screen, it might be for you. But it's not chill out trading, it's rapid, stressful, and relentless. You can think of day trading as being a bit like scalping's slightly mature older brother. Still short term, but trades last anywhere from a few minutes to a few hours, and the very definition of a day trade is that it is all wrapped up by the end of the trading day. No overnight exposure. For day trading, my default is a 15-minute chart. This one's on the US 30 index. As you can see here, you're looking to catch intraday moves before they pause or reverse. Again, the key is by the end of the day, you're flat. This style works best when the market's got some volatility like indices or hot stocks. You can keep a 1-hour chart open for context and then drop down to the 15-minute to find your actual entry. On MT4, you can use horizontal lines to mark key levels. You'll probably want to set aside 2 to 4 hours of screen time for this. In my opinion, you're best off picking the markets that are most active when you're available to trade. Like if you're trading in daytime in Asia, trade Asian stocks or the Japanese yen. Or maybe you want to get up early and trade during the New York session. Or perhaps you work nights and you could trade during the London trading session. Here are what I view as the pros and cons of day trading. Pros: no overnight surprises, sleep easy, plenty of intraday moves to work with, can potentially be run as a full-time job. Cons: can be emotionally draining, markets don't always want to move when you need them to, it's easy to overtrade if you don't have discipline. If you've got the time and temperament, day trading can offer serious opportunities, but you'll need to bring a plan. and a good supply of coffee. Swing trading, this one's for everyone who doesn't want to live in front of a screen all day. Swing trading is all about catching those medium-term moves, the swings, funnily enough, that happen over days or weeks. You're not fussed about the day-to-day noise, you're looking for setups that have room to run. I must confess, I've always been more of a swing trader, in part because it fits around work as an analyst in New York and London, but also I think it suits my personality. I'll do a quick scan of the market in the evening, check some charts, place some orders, then let it play out. Less stressful, and you don't need 10 monitors to pull it off. But you can still have them if you want. Here I've got a 4-hour chart on gold. This is the kind of time frame I'd use to spot setups that could play out over several days or even weeks. You're not chasing every tick, you're looking for strong moves, breakouts, pullbacks, something that has room to run. Once the trade placed, you can set your stop loss and target orders and just manage the trade from the mobile app if needed. Swing trading works across most markets, forex, indices, metals, as long as the trend's there. And you don't need to be on the charts all day. Maybe 30 minutes to an hour each evening is enough to stay on top of things. On MT4, I'll use the alert function to set price alerts. So if gold hits this level here, for example, I'll get pinged and can review the trade. Pros: fits around other job commitments, family, Netflix, lower trading costs than short-term trading strategies, more time to think about each trade. Cons would be that you will get caught by overnight news now and then. So you still need to check in regularly. Patience is required. It's not instant gratification. Swing trading is probably the most popular style for people who've got a life outside of trading, but still want to take it seriously. It's a good balance of flexibility and action. And then we've got position trading. This is long-term stuff that's almost but not quite like investing. You're holding positions for months, sometimes even years. Here you ride out the swings to focus on the bigger trend. I knew a guy running a managed account who'd build a position for 6 months before even thinking about exiting. The kind of guy who reads central bank speeches like bedtime stories. But that's not to say you can't be a chart reader too. For this, I've got a weekly chart of the NASDAQ loaded. This style suits things like stock indices, commodities, or even forex pairs with a strong trend bias. I'll typically do my analysis at the weekend, zooming out like this to mark out the long-term trend lines, maybe combining with fundamental themes like central bank policy or earnings cycles. You're probably only spending an hour or two a week, reviewing trades and adjusting if needed. It's slow, steady, but requires patience. You regularly see profits evaporate during price corrections, only for them to reappear when the major trend resumes. It's proper sit-tight territory. So the pros: potentially big moves equals big returns. Fewer trades equals lower transaction costs, i.e. less spread to pay. It suits people who enjoy a more research-based approach. Cons: requires serious patience and capital. Hard to stay emotionally detached through big swings. You'll miss a lot of short-term opportunities. It's great for people who enjoy the research side or want to take a big, high-conviction view, but it's not a style for quick gratification. So which one's right for you? There's no answer, just what fits you best. Ask yourself: 1. How much time can I realistically dedicate to trading? 2. Do I prefer lots of action or fewer, more considered trades? 3. Am I comfortable with overnight risk? 4. Can I handle sudden emotional ups and downs? 5. Or do I have patience to hold a position for a long term? Start small, pick a style that suits your life, not just your ambition. You can always adapt it later. So these 4 trading styles, scalping, day trading, swing trading, and position trading, each have their own advantages and challenges. The best way to find out what suits you though is through experience and careful risk management. If you're new to trading, consider using the WeTrade demo account to explore these strategies risk-free before transitioning to live trading. Always remember, past performance is not indicative of future results, and trading involves risk. For more educational content, subscribe to the channel and enable notifications to stay updated on future videos covering technical analysis, risk management, and advanced trading strategies. Thank you for watching and happy trading.